Hey guys, welcome back to my channel, The Dumb Stock Market Guy. And now we'll talk about what are dividends and who gets paid. So, we are talking about something that can make you money. Well, obviously, stocks make you money, but while staying invested, you also get some money, and that are called dividends. So, you have probably heard about them, but what are they? Let me tell you something, a really fun fact. So, I hope you have heard about Warren Buffett. So, Warren Buffett had a chunk of money invested in Coca-Cola. So, he had like 400 million shares of Coca-Cola. And the annual dividend which he made out of Coca-Cola was 736 million. So, he took home 736 million in an year versus the CEO of Coca-Cola took home 24.8 mil. So that's the power of dividends. Obviously, it depends on the amount invested also, but nevertheless, but investor always makes money, and that to good investors only. So back to our video. Now, our dividend is a part of a company's profit that it decides to give back to the shareholders. Shareholders. Imagine owning 1% of a company. In my first video, I have told about these percentage things and give the analogy of a pizza, but you can obviously see that video. So imagine owning 1% of a company, and that company makes $1 million, $1 million profit, and it says that you know what, my investors are really good and they are loyal to us, so we'll distribute 30% of our profit. So that would be $300,000. And as you have 1% in the company, you'll get $3,000 just for holding that stock. You are not working for them, you are just holding the stock. Well, I tend to fumble, so please stay with me. So, not all companies pay dividend. Even the company of Warren Buffett, which is Berkshire Hathaway, it never paid any dividend. And moreover, it's the most expensive stock in the market. Now, why the company pay dividend? Because they are profitable or mature. Let me explain this. See, there can be a few reasons. For example, I have a coal company and the work is just mining. So there is no future in it. There are many norms and restrictions. So you can't mine more. You cannot expand it more. So it's think that it doesn't need to reinvest all profits. So it thinks that it should be better distributed to the shareholders. And one more reason is want to attract long time investors. See, it's just a way of saying Hey investor, we don't just grow, we reward you too. Now, there's this term called dividend yield. So, it's a percentage value. So, dividend per share, dividend per share divided by stock price into 100. So, if stock price is 1000 and dividend per share is 50, so it would be 5% annual yield. So, do you always get it? No. If you own the stock before the ex dividend date, and it's not guaranteed, companies can cut or stop dividends anytime if they are in loss or need cash. So, you usually get the cash in your account, but smart investors, remember this, smart investors reinvest. So, this creates something magical, compound growth plus passive income. So, it can do wonders, and we'll see this in the next upcoming videos. So, should you really buy stocks? Not necessarily. Some fast growing companies like Amazon or Tesla don't pay dividends because their owners are so efficient, you cannot doubt their efficacy. They might reinvest all the profits to make the company grow. So you should go for good companies, good businesses rather than dividends. So now you have understood dividends. They are not magic, but they are powerful. This is a really good line. They are not magic, they are powerful. So I hope you liked it, and I'm really sorry I fumbled a lot in this video. Please subscribe if you want to watch this kind of videos again, and stay tuned. See ya.